The alarm bells are ringing louder than ever. The green future, powered by solar panels and advanced AI centers, is teetering on the brink of collapse. Why? Because New York's vaults lie barren, their silver cache spirited away to China. Imagine this. Your AI cores shutting down, solar modules failing, simply because the silver vein has dried up. Unbelievable. Yet here we are. Now let's dissect why this scenario is anything but normal. At first glance, the tech industry's demand for silver appears aligned with its glittering trajectory. By 2033, the need for precious metal-rich chips anticipates a 46% surge. But while AI and IT are scarfing down silver, solar energy is poised to consume over 20% of annual supply by 2027. This utopian vision is cracking under the weight of its own demands. Digging into the mechanics, what unfolds is a sinister interplay of global dynamics. Silver, once seen as a mere industrial commodity, has now ascended to the status of a strategic, indispensable resource. Why? The market faced unprecedented volatility between January 22, 2026. A geopolitical quagmire, coupled with a fundamental supply crunch, thrust silver into the spotlight. What used to be a predictably dull market saw prices soar, triggering stop orders and a panic-fueled short squeeze. Institutional players were snagged in a mean reversion trap, unable to pivot. How did we get here? The clues are in the fabric of global trade and finance. Geopolitical tensions flared as the US, under President Trump, delivered ultimatums at Davos. With demands for acquiring Greenland and threatening tariffs on key allies, a new trade war loomed. Silver's dual identity as a haven and industrial metal skyrocketed its allure amidst these frictional uncertainties. Meanwhile, the macroeconomic landscape was a pressure cooker. US GDP growth exceeded forecasts, conflicting with expected dollar strengthening effects, yet vulnerabilities lurked beneath. A higher than anticipated core PCE index stirred fears of inflation, nudging investors away from fiat currencies toward precious metals. Silver's unanticipated rally against the backdrop of high treasury yields and a weak dollar index underscored its burgeoning role as a safe harbor. And let's not forget the export embargo by China. By branding silver a strategic material and throttling exports, China cemented its dominion. This act exacerbated the supply gap, leaving the rest of the world scrambling. In New York, COMEX warehouses hemorrhaged 33.45 million ounces of silver in just a week. London's LBMA suffered similarly, with stockpiles hitting critical lows. Amidst this tumult, psychological traps lay in wait. The public, bombarded by headlines, might misinterpret these swings as transient, but they're not. They glance away, underestimating the enduring scarcity. It's the classic misdirection. While eyes stay glued to easy narratives, the chessboard changes. The hard proof? Exag USD's 2i21% annual yield shatters the mold. Contrast paper silver contracts against tangible Shanghai and India trades, where physical premiums soar beyond formal indicators. The backdrop is clear. The paper market's rate is lagging, playing catch-up to the bullish demand for actual silver. Zoom out for global context, and the pieces fall into place. Silver's upheaval finds echoes in global markets. This isn't an isolated drama, it's a universal shift. With geopolitical fault lines spreading, this silver debacle becomes a parable for the clash between digital and material domains. Looking ahead, the conclusion is stark. Expect an imminent price surge past the $100 psychological barrier. With physical silver virtually out of reach, a disconnect between supply and demand catalyzes explosive growth. Yet, the potential for sudden regulation or market intervention remains, the so-called kill switch scenario where organizations attempt to stabilize soaring prices. So, what's our bulletproof plan? Recognize this event as more than a market hiccup. Arm yourself with foresight, seek out alternative resources, diversify investments, and above all, stay informed. Remember, in a world where the strategic ball shifts relentlessly, being prepared isn't just prudent, it's essential. As the silver tides test global resilience, the message is clear. Progress fueled by finite resources demands a radical rethinking. Here lies the harsh paradox of the green revolution, a quest for sustainability, yoked to unsustainable extraction. This happened. The green future, a tantalizing promise luring us with visions of a utopian tomorrow powered by renewable energy and AI's limitless potential, is nearing a standstill. From the luxurious halls of New York to the vast factories of China, the gears of progress are grinding to a halt. Why? Because physical silver, once abundant, has vanished, slipping from our grasp like water through a sieve. Shocking, isn't it? But the reality couldn't be clearer. The AI industry, already straining against surging demand, will see its need for chips, brimming with precious metals, skyrocket by 46% by 2033. Meanwhile, come 2027, solar energy will demand over 20% of the planet's silver supply. The numbers tell a tale of relentless appetite with no way to satiate it. And yet, they claim everything is under control. They assure us there's nothing to worry about. But when you peer past these reassurances, the truth stands out starkly. It's not just another bump on the road. It's the crumbling facade of an intricate illusion, one we've all been sold. dig deeper, and the mechanics of manipulation unfold before you. Silver isn't just another commodity. It's the lifeblood of nuclear reactors and the linchpin of the AI-driven future we're racing towards. But now, its reservoirs are drying up. In a bizarre twist of fate, today's silver is what lithium was to yesterday, a cornerstone of industrial prowess now slipping into scarcity. As demand outpaces supply, the global chess game intensifies. China's decision to reclassify silver as a strategic material, choking its outflow, leaves others scrambling. In New York, COMEX warehouses are bleeding silver, with 33.45 million ounces disappearing in mere days. London's LBMA isn't faring any better. With stockpiles at unprecedented lows, the cracks in the system widen, ready to split apart. Here's where they catch you. While you're engrossed in the bewildering play of stock prices, the real story's unfolding backstage. Media narratives divert attention, baiting with transient tales of short-term dips and spikes. Yet their endgame is to keep you blind to the deeper crisis, a carefully orchestrated act of diversion where understanding emboldens the few while leaving the many in the dark. In a display of monumental irony, the XAG USD annual return of 221% shatters precedent. Physical silver in Shanghai and India is trading at premiums leagues beyond paper contracts. Meanwhile, official price indicators languish, desperately trying to mirror an insatiable physical demand that won't subside. Switch to a global lens, and the pattern repeats. Silver's troubles echo across continents. Mark this not as a local inconvenience, but as a universal shift, a harbinger of the seismic clash between intangible tech advances and the raw, tangible world. Forecasting the future is tricky, yet one prediction seems inevitable: prices vaulting past the $100 barrier soon. In this landscape of dwindling silver, every divergence between need and availability primes the pump for unprecedented surges. Enter the kill switch scenario, potential abrupt interventions aiming to rein in this volatile fever. Now for some straight talk, this isn't a flicker, it's a fire. Be forewarned. Look beyond the traditional, they'll not suffice. Diversify, stay updated, and think ahead. When the strategic field continuously shifts, proactivity isn't just smart, it's indispensable. The silver saga underscores an existential truth. As we hurtle towards technological dreams, the stark paradox lies bare. Achieving sustainability thrives ironically on impoverishing our vital, finite resources. The message is crystal clear: progress can't come at the expense of neglecting our foundation's fragility. It happened. Just as we warned, the romanticized green future is facing an unexpected tailspin. A crucial component of this future, neural networks and nuclear reactors, is under threat as physical silver dries up in New York and trickles away to China. The silver reserves that were supposed to buoy our clean energy aspirations and AI advancements have vanished from one side of the globe and amassed on the other, leaving the West in a precarious scramble for alternatives. This agitation isn't just a market quirk, it's a telltale anomaly defying the official "everything is fine" narrative. But beneath this placid surface, chaos roils. The price of silver has scaled to unprecedented peaks, leaving London's LBMA and New York's COMEX out of sync with frantic market demands. Why silver, you ask? Because it's no longer just an industrial tool, but a strategic linchpin, claiming the stature of lithium from a decade ago, a vital asset undergoing a tectonic shift. And here's the mechanism driving this upheaval. As the tech and energy sectors grow ravenous for raw materials, the West finds itself outmaneuvered by China's savvy strategic reclassifications. This maneuver by China, throttling the flow of silver, is exacerbating the deficit for producers of AI chips and solar modules alike. Data centers and reactors rely heavily on a steady silver supply, welded into the infrastructure of the digital age. Let's peel back the layers. To grasp a single solar panel, you need 15 to 20 grams of silver, and projections for 2027 dictate that photovoltaics alone will consume upwards of 20% of the annual silver output. The squeeze is real and palpable. In observing the psychological trap laid for us, there's an insidious distraction at play. While eyes fixate on transient headlines and seemingly isolated market swings, the broader reality escapes notice. This isn't just monetary manipulation, but a strategic misdirection. They're eager for you to view silver through the lens of immediate volatility, while behind the scenes, the strategic repartitioning of global resources unfolds. Here lie the hard proofs. You can't ignore the spike in silver prices, soaring 221% as testament to its increasing value in an unstable world. Exchanges wobble on fragile legs as physical silver trades at premiums much higher than what sterile paper contracts suggest. As demand intensifies, so too does pressure on the global supply chain, a stark contradiction between perceived digital prosperity and the gritty limitation of physical resources. Viewing this landscape through a macro lens reveals an even grimmer tableau. The turbulence isn't confined, it reverberates globally, beckoning a confrontation between the digital utopia and the tangible limits of our planet. This isn't a transient defect, but a systemic reckoning. The march of AI and solar power, a beacon of modernity, must now grapple with its dependency on an increasingly scarce commodity. The endgame plays out predictably, either mitigated through radical repricing or curtailed by regulatory interventions like the speculated kill switch on silver monopolies. Stakeholders jockey for position as the market teeters at the precipice of a resource-driven crisis. In this grand finale, be prepared. It's not merely a market correction, it's an alarm bell. Irony and reality clash in a stunning paradox that amidst strides towards sustainability and innovation is the blatant impoverishment of critical resources. The message is stark. Progress cannot subsume the foundational truths of resource scarcity. We must diversify, keep informed, and proactively navigate the ever-shifting sands of technological and material demands. The future promised us green energy, a digital paradise flourishing under the sun, with AI powering our economies cleanly. But beneath this utopian surface lies a grim warning. The heart of your next technology leap might just grind to a halt. Silver, a metal quietly underpinning this revolution, is vanishing before our eyes. This isn't a bad dream. It's happening. The twin engines of our future, data centers and nuclear reactors, are on a collision course with reality, as the world's silver reserves deplete at an alarming rate. Green technology demands a silver lining, quite literally, yet the stores of this precious metal are siphoning away, piece by piece. In the numbers game, the statistics are piercing. By 2033, AI industry demand for silver-infused chips will rise by 46%. Meanwhile, each solar module demanding 15 to 20 grams of silver is a mere snapshot of what's to come. By 2027, solar power alone is slated to consume over 20% of annual silver supplies. These aren't just concerns, they're existential ultimatums for industries staking their future on silver. Let's examine the mechanics, a story of supply chain strain and price chasing. As solar and AI industries swell, their appetites for silver multiply, met by draining reserves and escalating market volatility. Consider this. A surge has lifted silver prices by over 221% recently. Ghostly echoes of paper contracts can't capture the real struggle for physical silver, where genuine trading prices break much higher ceilings. It's a devious squeeze, a resources chokehold hidden under alarms and volatility flutters. The masses falter, misled by noise and smoke, trapped in a narrative of engineered reassurance. The media broadcasts waves of market shifts but buries the lead, a critical underlying deficit of strategic material. It's distraction at its finest, a sleight of corporate hand urging focus on silver's market swings while they reshuffle global resource logistics silently. However, hard evidence punctures the facade. Silver's demand outstrips accessible supply, propelling prices ever higher. This isn't just financial math, it's survival calculus. As silver stocks thin, futurism itself is sandbagged by scarcity, a paradox of digital dreams weighed down by metal's physical limits. On a wider scale, the horizon darkens. This disruption isn't confined locally, it ripples outward, mapping a collision course with geopolitical stability. The ambition of AI and renewable vigor, lights of progress, wrestle with something more elemental and grounded, the finite nature of silver. In conclusion, brace for systemic upheaval, not a minor adjustment, but tectonic shifts in valuation and policy. The game will culminate either by unsustainable price elevation or through regulatory checks on silver dominance. Markets are a battlefield now, strategies reshuffled under the shadow of scarcity. This is more than a correction, it's the tolling of reality's bell. In the chase for innovation, material foundations have been overlooked, a striking rebuke to unchecked advancement. Our path forward is contingent on awareness, diversification, and a pivot from linear growth ideologies. The era of ignoring resource constraints is nearing its dramatic close. It happened. The green promise of a bright future hangs in the balance as your neural networks and nuclear reactors teeter on the brink, starved by a deficit, not in ideas, but in substance. Silver, the underappreciated powerhouse of industries from tech to renewable energy, has hit a critical low, vanishing from stockpiles in New York, commandeered by Chinese markets. Anomalies are stacking up. The demand for AI chips laden with precious metals is poised to spike by 46% by 2033. A single solar module demands up to 20 grams of silver. By 2027, solar energy alone will devour more than 20% of annual silver supply. These aren't just warnings, they're existential cries for sectors whose futures cling to this gleaming metal. Here's how the gears turn. A perfect storm brews as the AI boom and solar expansion both thirst for silver, revenues soar, but reserves plummet. Silver prices have soared over 221% recently. Wall Street trembles. Paper contracts dance to the tune of market makers, hiding the true frenzy for physical silver whose tangible worth defies listed prices. This isn't supply and demand, it's a covert siege on resource availability. Mass media crafts a comforting mirage while diverting your gaze from the stark truth. the strategic silver shortfall. A distraction maneuver par excellence, urging viewers to fixate on market fluctuations while global corporations stealthily reorient logistics, hoarding this pivotal resource away from public scrutiny. Yet, in the court of cold facts, the proof is concrete. Demand outstrips supply, propelling prices into the stratosphere. This isn't a financial equation, it's survival instinct embodied. Silver reserves vanish, placing the entire digital transformation under the shadow of a metal's physical limits. Globally, the stakes elevate. This disruption knows no borders. It promises repercussions that stretch across territories, hinting at unsettling implications for geopolitical stability. The industrious dreams of AI and renewables, those beacons of modern progress, are tethered to something far more primal, the hard finite reality of silver. Forecast the climax, expect colossal upheaval. As prices veer towards unsustainability or regulations attempt to leash silver's dominance, markets become contested terrain where the rules are as fluid as the strategies therein. This isn't business as usual, it's reality's chime. Behind the race for innovation lies a forgotten trail of limitations, serving as a harsh reminder against the unchecked pursuit of advancement. The future relies on comprehension, resource diversification, and a departure from the notion of unbridled growth. A new epoch approaches, one that demands we respect and reckon with the raw materials so pivotal to our ambitious endeavors. The green future you were banking on, the one that promised endless possibilities through AI and solar energy, is in danger of collapse. Not because of a lack of innovation or investment, but because a critical element, physical silver, has vanished from the New York stockpiles and is now controlled by Chinese markets. Just as we warned, this pivotal resource is slipping through our fingers, sparking fears of an impending halt to progress. This isn't normal. The anomalies stacking up aren't just outliers. They're warnings of a system in crisis. Demand from the AI industry for chips embedded with precious metals is expected to surge 46% by 2033. A single solar module can require up to 20 grams of silver, with projections indicating that by 2027, solar energy will consume more than 20% of the year's silver supply. These sectors, reliant on this vital metal, face an existential threat. The mechanics of this crisis are deceptively simple yet deeply troubling. As the AI and solar energy sectors thirst for silver, prices soar and reserves dwindle. Recent trends indicate a 221% increase in silver prices. Wall Street is unnerved. The market operates on paper contracts that obscure the reality of physical silver's true demand and worth. This isn't just about supply and demand. It's an orchestrated siege on resource availability, a strategic manipulation veiled behind economic norms. The psychological trap is set perfectly. Mainstream media paints a reassuring picture, directing your attention to market trends and fluctuations while shielding the real crisis, the looming strategic shortfall in silver. It's a masterful distraction. Meanwhile, global corporations silently adjust their logistics, stockpiling this essential resource away from prying eyes. The hard proof lies before us, irrefutable and crystal clear. Demand has surpassed supply, with prices soaring uncontrollably. This is not a standard economic model, it's survival instinct at work. With dwindling silver reserves, the entire digital revolution is threatened, casting a long shadow over the prospects of sustained technological growth. The issue isn't confined to our borders, it has global implications threatening to destabilize geopolitical balances. The dreams of AI and renewable energy, symbols of modern progress, are shackled to a much more ancient force, the finite reality of silver. As we reach the endgame, brace for seismic shifts. Whether through skyrocketing prices or regulatory attempts to rein in silver's market hold, the trajectory is fraught with unpredictability. The terrain of the market has become a battlefield filled with fluid strategies and changing rules. This isn't just another business cycle, it's reality's alarm. Behind every stride towards innovation lies a trail of neglected constraints, reminding us of the dangers of unchecked progress. Our future's success hinges on understanding these limits, diversifying resources, and moving away from the myth of endless growth. A new era is dawning, one that calls for a balanced respect for the raw materials that underwrite our lofty aspirations.